To the African Development Bank President, Professor Banji Oyeyinka, revealed this when a delegation of the bank and the United Nations Industrial Development Organization gave separate reports to Vice President Kashim Shettima on the status of ongoing projects in Nigeria. The World Bank's Managing Director of Operations, Anna Jerde, will arrive Nigeria today on a two-day working visit. This trip aims to deepen the World Bank's involvement with Nigeria on key aspects of the country's development agenda, such as macroeconomic and fiscal policy, energy access, and digital infrastructure. She will participate in a meeting of finance ministers from Western and Central Africa, jointly organized by the government of Nigeria and the World Bank. U.S. Secretary of State Antony Blinken has left for Cairo, Egypt, after his visit, after a first stop in Saudi Arabia, where he met Saudi Arabia's Crown Prince Mohammed bin Salman. Blinken is on a tour of the Middle East as Washington tries to further negotiations on a normalization deal between the Kingdom of Saudi Arabia and Israel, as well as make progress on the talks for the governance of post-war Gaza. All right, let's quickly take you through the markets, shall we? The Nigerian exchange started the week on a bearish note as the all-share index declined by 0.73% to close at 103,659.81 points. The year-to-date return is at 38.63%. That was as high yesterday because the market lost some points yesterday, but if you recall, the stock market gained about 46% in the year 2023. So what you're seeing right now on the screen are the numbers for yesterday. That's Monday's close. Market capitalization at 56.72 trillion naira. We saw that FBNH, Transcorp, Oando, UBA topped the volume chart, and we also saw FBNH, Nigerian Breweries, Geregu, and UBA topped the value chart. So the numbers you're seeing on the screen right now indicated that Cadbury, May and Baker, Mayer PLC, Cornerstone, as well as DAC Communications were in the green on Monday. In fact, DAC Communications, I was looking at the stock price yesterday, and we saw a bit of intraday gain. It traded at the time at 69 kobo, and it ended at 77 kobo. And I also saw that for a few other penny stocks. There's so much attention right now for penny stocks because it's a bit cheaper. And so investors are trying to take advantage of the penny stocks, hoping that they can make quick money in just a few days or a few weeks. So we see a lot of speculation going on the market. But yesterday, what we saw was a bit of profit taking. And that comes, for example, within Monday's trade, traded at around 69 kobo. And yesterday, it ended at 77 kobo. All right, let's take a look at the money market. Yesterday, it commenced with unfavorable system liquidity, leading to an increase in interbank rates, with the OBB and overnight rates concluding at 22.10% and 22.90% respectively. For the Treasury bills market, we saw it was calm as the Debt Management Office revised offers from 417 billion naira to 1 trillion naira. The market saw offers with the 23rd of January NTB paper at about 16.3% and 28th January OMO paper at 17.30%, as average yields remained at 9.92%. Now, for the local bond market, we saw improved offers across the curve due to the NTB issuance circular with a tight liquidity in the interbank market as yields inched towards 15.48%. The Eurobonds market were bearish yesterday, influenced by the latest U.S. data. The speech by the Fed chair, that's Jerome Powell, that is the central bank governor of the U.S. That's what it means. The central bank of the U.S. is called the Fed, the overall, because they also have, other let me say, junior central banks or across states, but Fed Chair Jerome Powell, and he mentioned that the rate cuts would continue. And as we saw that, with his speech, we saw that his speech continued to deplete market anticipation, fueling sell-off in the Eurobonds market as yields grew to about 9.95%. Now, for the foreign exchange market, the Naira has really been suffering in the last few weeks, in the last few months, I must say, and that is really impacting the cost of living. As at yesterday, we saw that the market, the Naira closed at 1,419 419 Naira 86 kobo to one US dollar. While, as you can see, around the pound is trading around that band, the euro is also trading around the 1,500 Naira band. Now, let's move over to the foreign markets. Do we have the graphics, guys? So that we'll take a look at the United States, where stock futures this morning were mixed, that's for the US, after recent sell-off triggered by rising bond yields, while European markets opened higher as investor confidence stayed strong despite uncertainty about interest rates cuts. China and Hong Kong stocks surged this Tuesday as authorities in the world's second largest economy acted to halt a recent equity sell-off. So we saw that Asia Pacific markets were a bit mixed, as you can see right here on the screen, while all prices are remaining relatively stable this Tuesday morning. Natural gas at $2.08, coal at 119 US dollars, up 2.5%. What other commodities do we have there? Metals, gold is trading at 2,025 US dollars. Steel is doing 3,870 yuan, that's Chinese yuan. Iron ore is trading at over 130 US dollars. Okay, palm oil there. I'm taking a look at the numbers just as you are doing over there too. Palm oil, 3,833 US dollars. Wheat is trading down. Cocoa is up 3.5%. If you take a look at the trajectory of cocoa, in the last few years, we've seen that that commodity has been on the rise. I remember about 2 years ago, cocoa was trading at around 2,000 US dollars. And now I'm seeing it at about 5,189 US dollars a ton. So you can imagine why your chocolates are more expensive and also your other cocoa derivative products. Sugar at $23.59 there. That's up 0.30%. And just to talk about sugar a bit, I got a press release, I must say, from the Master Bakers Association. And in fact, let me see if I can get that on. And the Association of Master Bakers have said in their press release, that was yesterday, press release on program of activities leading to total withdrawal of services nationwide. And in the document, according to the association, they did say that all baking materials have skyrocketed to all-time high in the last 7 months. For instance, the association said in its press release that flour has risen from 30,000 naira to 50,000 naira, sugar from 35,000 naira to 75,000 naira, butter from 18,000 naira to 26,000 naira, while diesel from 800 naira to 1,300 naira, firewood from 180,000 naira to 400,000 naira. That's firewood. That as a result, about 30% of our members have since folded and is still counting. That members have reduced their staff intake by 40% to still remain in business before the latest unprecedented jack-up of the prices last week. The Association of Master Bakers are calling on the government at state and federal levels to intervene immediately to halt this dangerous slide, as it will worsen the security situation in the country. The association went further to say that it will have no option left than to embark on total services withdrawal 2 weeks from the date of presentation of the Charter of Demands to ameliorate the unacceptable predicament. So all local, state, zonal chapters of the association are by this advised to adhere and totally implement accordingly to save their businesses from being thrown into the already saturated unemployment market. So what they're trying to say in essence, the Association of Master Bakers and Caterers of Nigeria, in fact, the Turanchi that I'm speaking, the grammar, the Oyibo that I'm speaking is that people baking bread and all other confectionaries are not finding it easy. What it means for you and I is that bread might be scarce, and if you see bread in the supermarket or in the market, it will be more expensive. That is the essence of just what I'm reading now. So forget all this English. Why they're saying this is that I've enumerated the prices of the items they use in baking, and it's gone up. In fact, firewood too, from 180,000 naira to 400,000 naira. Who will stay in business doing that? I saw some protests in some states across the country, and the government really needs to take this serious and not say that the opposition is inciting citizens to protest. Which opposition? Which opposition is more than hunger? And when you have a hungry man, you definitely have an angry man. So I hope that the president is watching and everyone around him to forestall what might be brewing. Because the cost of living right now in Nigeria is unbearable. Even the rich is also crying in this situation. So let's really know what we're doing. Now let them know what they're doing, not me. I know what I'm doing here. Mine is to inform, educate, as well as, really more of inform and educating you and bringing you up to speed with everything happening in the world of business and finance. But it's the role of the government for the welfare of the country as well as the security of lives and property. All right, what else again do we have? Do we have any other thing, guys? Or let's just quickly take a break. While we take this break, connect with us, as you can see on the screen. When we come back, we will be looking at what are the key trends that we might see this year. And I need you to listen to this interview because why you need to listen to this interview, not just today and this show, is that we give you clues as to what is happening in the economy and what will happen so that you can better prepare yourself. That is what it means, really. When you listen to the analysts that I speak with on the program, the guests that I speak with on the program, it gives you an indication. So don't just see it as just watching TV. Take those information and act on them. Whether your money is in the bank or whether it's the one you are spending and all of that, be attentive. And that is why I'm always here Monday to Friday, 11 a.m. to 12 noon, bringing you up to speed with everything concerning business and finance. So let's quickly take a break, and we'll be talking about the key trends that will be shaping Nigeria's economy this year. We'll be right back. All right, welcome back to the program. I'm afraid we have to go off right now on terrestrial because we are going for a live broadcast right now in Lagos, but don't worry, I will get to speak with my guest in the jiffy and we'll bring you back the interview. So let's quickly go to Lagos for a live broadcast.
Chief Joseph Sanusi, former governor of Central Bank, former Governor Babatunde Fashola, and speakers including President Kagame of Rwanda and George Oponwe of Liberia, U.S. Congressman Jerry Weller, Bishop Matthew.
Can I see Mr. Amida, please? Okay. Mr. Amida, good to have you on the show again. Now, let's get started. Let me ask this question. From this, your report of 2024, what is the difference between your 2023 report and your 2024 report?
Yeah, thank you very much, and good morning. Thanks for having me. 2023 was a very difficult year for Nigerians generally, and I think we need to start by acknowledging that it was a year where there were so many activities, decisions taken by the new administration. The FX reform took place. We had the removal of subsidy. We had significant changes in the parastatals across the country. And when you combine all of that with the devaluation that we had with the Naira, I think in putting these reports together, we try to articulate the key 7 important factors that will really define 2024. And the first is around the fiscal reforms that needs to take place. Second, I think we spoke about the need for us to have a significant increase in productivity and the importance that the CBN, the central bank, and the monetary authorities need to place on finding the right instruments and frameworks to ensure that the monetary policy outcomes that we expect, they are achieved. And also, I think we touched on the fact that Nigerians, we believe, given the experience of 2023, we will be able to somewhat adjust better to the situation of things in 2024. But overall, the summary of the report is that we, as a country, the citizens needs to do their bit. The government needs to get things right because the margin that we have for error is quite slim. Given the experiences that we faced as Nigerians. And I heard on the show we mentioned earlier around how the purchasing power of Nigerians has really been impacted. And very importantly for all of us, we really need to pay attention to the trends that were articulated in this very, very insightful reports published by our PwC.
Okay, I'll come back to a bit of what you said in terms of what was interesting for me while you were talking is that the citizens should do their part. And I'm wondering what you mean by the citizens should do their part. Let me allow you to explain that, because for me, I know that I'm doing my part and I'm doing my best, personally and even job-wise, as it were. Personally, I know that I've had to tighten my belt. I know that, I don't do frivolous spending. I know, you know what I'm talking about. Professionally, I'm always here in the morning, the other side. So I know that I'm doing my best. And I know this for many Nigerians too. Many. Some are not also doing their best. Some are just lazy and complaining, hoping that manna will fall from heaven. So what do you really mean by citizens should do their best? Because we've been doing our best since my, how many years on earth now that I know that I'm now an adult fending for myself?
Okay, so thank you very much. So the point is, very important, given the nature of our economy, we are import dependent. And there are a lot of things in this country, they are driven by the FX situation. As we speak today, before May, the official rate was 460. Now we're talking 1,419. What that does is it has very big impact on the prices of all imported products because we produce very little in the country. It has very big impact on, for example, the price of refined products of petrol that we use to power everything in this country. And how did we get here? I think when you take a step back you will see that there are some activities that the central bank has been taking lately. A very important one is around the some of the circulars that were published just a few days ago, trying to limit the open position of banks, trying to woo IMTOs. For me personally, I also believe as citizens, we also need to contribute our own quota by ensuring that we don't, if you don't need dollars for genuine international transactions, we need to at least to some extent scale back on the bet we are taking against the naira as citizens, because all of this, when we do it, it helps in the long run to reduce the pressure that the naira faces, because the need for dollars should genuinely be for those that have legitimate reasons for international transactions. And that bit is what I meant when I said as Nigerians we need to do our own bit, because when we cut back on that, the pressure on naira reduces. The naira is able to find the right level in terms of pricing, and ultimately we are able to bring, because we import a lot of inflation into this country, and we've imported a lot in 2023 since this devaluation happened. Structurally, if we cut down on all of this, I believe as a country, the inflation generally can be managed when you add that to the monetary policy tools, which the CBN will have more clarity around how that will unfold.
If the citizens have to take advantage of, if they don't need dollars, that means they have to go for locally produced goods. The question is, do we have those alternatives? Do you understand? If you tell me not to patronize imported goods, there should be a locally produced alternative.
Yes, I think it's not possible to say we shouldn't patronize imported goods. I think we have to do, if we don't have local alternatives, yes, we need to import in the short term. But the real point is not trade-related FX demand. The issue is the FX demand that just, you get money and all you do is to deposit the cash in the bank. And you know, in economics, that's even a fundamental problem, because you distort the process, the flow that you should have in the money multiplier chain. And as you know, in the country, about 60% of Nigerians work in the informal sector. And what that means is the channel through which money flows into the economy. It has to go through those that are in the formal sector. Spending power is not flowing the way it should be. The cash that we are putting in the bank is not to the overall economy, which is why in Nigeria today, you can go back and say that, oh, the money supply in Nigeria, for example, between 2022 and now grew by almost 26 trillion. Yet the GDP only grew marginally by 2.5%. And what that means is that the growth in money supply is not really translating to economic activities. And that is a distortion that the central bank alone can't fix. It's a distortion that needs to be fixed by ensuring that the growth, as the structure of our economy should be such that the growth that we have is translating into productive activities that ultimately result in a much higher GDP for the country.
Mr. Media, how much of 2023 economic remnants have found its way into 2024 that are issues that will shape the economy in this year report? I hope you understand my question.
Yeah. So I think the first one, I think FX still remains a major problem, because in 2023, I think we closed around 8,900. Now we're at 1,400. And to a large extent, in 2023, the government said that there is no subsidy, for example. And the pricing of petroleum product that we have now, I think the closest we have to it was when the naira was devalued and we were at about 700 and 750, 800. Now at 1,400, who pays for the differential? And it is very likely there can be pressure. If government doesn't want to pay the subsidy, then there can be an increase in prices of petroleum products. And what that means ultimately is additional inflation, because the goods that are produced locally, for example, if you look at the farming outputs from the north, they need to be transported down to commercial centers across the country. You spoke about the price of flour and other inputs used in the production of bread. All of that may even be may increase further if the increase in FX as we have it now remains. Inflation is another point, which is you can link into FX, but generally is something that we've had to deal with for a bit. And the outlook generally, I think according to the IMF report is that it should stabilize. It should be around 23% this year and maybe 15% in 2025. The actions of the central bank has made it clear that part of their objective is to target inflation and achieve price stability in the long run. So hopefully from the MPC that is scheduled for later this month, we'll start seeing if the actions and decisions that will be taken will be aligned with this inflation targeting posture that they've communicated. I think the other bit will be generally around productivity. The unemployment rate still remains very high. It was high in 2023. It's still very high in 2024. We believe we need to see the reforms that the government plans to implement start taking shape before we can conclusively see what the direction will be for unemployment, because youth unemployment in a country like this is quite tough. But there are positives that as a nation we can take advantage of. And when you look at it, Naira has been devalued. We have very highly educated youth, maybe population. And as a country, our job is now to translate some of the benefits of this devaluation into export earnings. We published a report as PwC a few years ago where we spoke about how Nigeria can export the brain capacity of our citizens. And this situation that we find ourselves in provides a lot of things to help reduce the pressure that we have.
Number one, which you talked about, executing fiscal reforms, balancing ambition with budgetary implementation. When I saw that, balancing ambition, it's good to be ambitious. It's good to have revenue targets. What do you think will be influencing Nigeria's revenue targets for 2024 vis-a-vis the historical perspective? Because we've always predicted, we've always had ambition, we've always said we'll make so amount of money. But history has shown us, at least in the last few years, that we do not get there. So when I saw your balancing ambition, I'm not part of you people that created the report, but I assumed that could also be it, balancing ambition with realities. So what key factors will influence Nigeria's revenue targets for 2024? And historical performance. So balance that for me now. And
So I think historically, like you rightly said, we've underperformed mostly. A very key component revenue as a nation is our oil production. And when you look at it in 2023, for example, the budget, I think it was about 1.69 million barrels daily production. We ended up at about 1.2.
Even dropped to about 900,000 in December of last year.
At some point during the year, we were that low. So what that means is that's part of the reason why there is no FX, because the liquidity that would have unlocked if we had done that produced that 1.69 is way more than what we ended up with. So the government needs to, and the budget for this year, I think the deficits that we have between the expenditure and the expected income is about 9 trillion naira. And that's, you can link to the aggressive posture of government in trying to unlock revenue as much as possible. So for us, it is the message in here is the need for government to be able to implement reforms that can help unlock revenue, unlock productivity, deliver on the targets that underpins the budget, but that level of disparity between the expected target production and the actual. Beyond all of that, there's a need to have some sort of tax reform. The tax reform, we shouldn't tax those that are already in the tax bracket too much. we should try to, at least the government should bring initiatives that can bring more people into the tax net and increase the revenue potential of the country. But generally, the gap that we have now, the other point to note is the pressure that the debt service obligations that we have is putting on our overall financing. This year, for example, about 8-point-something trillion is budgeted for debt service obligations. And to the extent that that overhang remains, it becomes very, the headroom that the government that they will have to do other things may be impacted. So the essence of that particular trend is the first one and the very important one, that the government needs to ensure that at least they have a well laid out strategy to be able to deliver on the ambitious targets that has been set for themselves in the 2024 budget.
Let's take a look at the second trend, which if we have that, we can put it on air, guys. Do we have those trends, the graphics, so that we can follow up, our viewers can follow up with it? For the second one, evolving monetary policy stance, finding the right framework and instruments to achieve price stability. That was also particularly interesting for me, finding the right framework. That means that perhaps the frameworks we'll be using before in monetary policy have not really worked. And the governor of the Central Bank of Nigeria has mentioned that several times in terms of even the transmission mechanism. In December, just before we went home for the holidays, I spoke with the Central Bank governor, and he talking about inflation as well as FX. And he did tell me at that time, just about 2 months ago, that, Nancy, the transmission mechanism of the monetary policy framework, the way it was not working. So finding the right framework here, what is PwC suggesting? Because we have the next MPC meeting will be held February 26th. So what do you mean by right policy framework?
Yeah, I think I think the central bank governor mentioned, he touched on this yesterday, and which I think, according to him, he said the reason they are just scheduling the MPC now is that he wants to ensure that the foundation, they get everything right, such that when they start implementing their own policies and trying to use the tools that are at their disposal, the impact will be well transmitted within the economy. And for us, as we mentioned in the report, to achieve price stability in the long run, the central bank, inflation needs to be brought under control, and FX needs to be controlled. The tools that are available to us, I think I've mentioned some of them on the call now. The CBN came up with quite a bit regarding the circulars that they introduced recently. But generally, for us as PwC, we believe as a tool, the central bank needs to ensure that we are able, the key ingredients that are the factors causing this high inflationary environment, we are able to deal with them. The inflation is cost push. The cost element has to do with the contribution, for example, of refined products in the total FX demand of the country. Hopefully, the introduction of Dangote refinery will help us solve that. The differential that we have between the parallel market and the official market, the convergence has taken place now. Hopefully, that will bring in more flows. The CBN governor mentioned yesterday that he's seeing a lot of interest from FPI for portfolio investors. Such flows, when they come into the economy, hopefully they help improve liquidity. And overall, the level of productivity, for example, the CBN has done quite a bit of OMO up activities in the last few months, and that's really hasn't really reduced the expected. Reduced the expected level of inflation. Inflation still went higher to about, I think it was still about 28.2%. But in the long run, we feel all of these tools that are available to the central bank, if implemented properly, they will help us achieve the long-term stability that we require as a country.
Now, how can the officials achieve coherence and alignment between fiscal and monetary policy that will also help stabilize prices? How do you expect the government to do this? Because it's really what we are in Nigeria now is more than even a policy trilemma. Is there anything like a policy quadrilemma or even more, okay, multilemma? We have multilemma challenges. You know, lack of production, FX rate going high, inflation, unemployment, poverty, all the macro numbers aren't looking good. You know,
Yeah.
so how does the policy, the fiscal and the monetary policy, how do they attain coherence without jeopardizing the fiscal authorities' targets? I hope you understand what I mean, because the fiscal
Sure.
authority also have their own ambitions to make money, get revenues and all of that, while also managing debt. So how do you achieve an alignment in many misalignments where your debt levels are projected now to get to 107 trillion naira from where we are now of about 87 trillion naira or so. So it's actually it's multi-lemma. If there's any English like that, if it's none, I've formulated my own this morning.
So I think the very important thing is for both of them to speak to each other. And there is no point in CBN having its own activities, the fiscal side of things, doing their own stuff. And to the central bank governor's credit yesterday, he mentioned that they now have regular meetings where they compare notes. They are in touch regularly to ensure that the activities of the central bank is aligned with the direction that the fiscal authorities are what they're doing. So, but that is fundamental. It is until I don't think we did that very well in the past, and if we are able to improve going forward, it will be a very at least very good message to the investors and other stakeholders internationally. And also the aspect, one other thing that we also need to take from the reforms that are taking place in the central bank is that the monetary authorities needs to be restricted to their core mandate. And I think the central bank governor, since coming on board, is trying to correct that by limiting the level of intervention that I think that the CBN introduced or that they continued with. So all of that kind of posture helps send the right message, because the central bank should focus on its core mandates, the fiscal authorities should focus on their core mandates, and they have at regular meetings they compare notes to ensure that at least the plans that each of them have they are well synchronized, and that the outcomes are well tracked, and hopefully we start seeing them materialize from 2024 onwards.
Do you think that I'm dwelling so much on the monetary side and the fiscal side? Of course, we know that for any economy, they're like, it is a tripod: monetary, fiscal, and perhaps trade. If you add any other tripod, any other thing can stand. The transition we're seeing right now, according to the central bank governor, because he also mentioned that, the transition to inflation targeting, how will this work? Given in mind the kind of pressure that we're seeing right now on inflation, of course, 28.9% is also been predicted to go higher than that. The cost of living crisis has been exacerbated because of prices, higher prices. So will they really get that? Will they achieve that inflation targeting now?
So I think the inflation targeting is not, the very important thing is to, which is what the central bank has done, and you mentioned yesterday that they are going to improve on their communication, is to be very transparent. When you are transparent and you let people know that this is what your long-term objective is. If your long-term objective is to achieve X level of inflation, and that is well communicated to the market, the next thing for the monetary authorities to now do is to ensure that the actions that they are taking, the policies they are introducing, they are geared towards taking us to that target. So we cannot say, for example, that we want to achieve a long-term inflation of maybe single digits of inflation, and then every policies that we introduce, they are taking us in another direction. Then investors will lose confidence in the bank or the monetary authorities generally. So as a whole, it is not, when we have the target, it is not so much that the target must be achieved in 2024. But the objective is to ensure that at least we have policies, initiatives, and that the market perceives to be taking us in the direction of the targets that we've set for ourselves. And we are very transparent in how those policies are communicated and all the activities of the central bank, how they are being coordinated to ensure that at least everything aligns towards what has been determined to be the long-term target of the bank.
Now let's talk about your third one, and I hope we can run this through. Your third, talking about investors being cautiously optimistic. What are the factors that would influence that cautious optimism for Nigeria, and how do you think that ratings agencies, perhaps if we see downgrades, though I know that a few other ratings agencies have, taken us from negative to stable, but how do you see ratings from Fitch, Moody's, and co. Influencing Nigeria's investment climate?
Yeah. So generally, I believe the ratings are outcomes of the reforms and the initiatives that we implement as a country. If we continue to do the right things, it is natural for the ratings to improve. That's just the way it works. So our job is to do what's within our control, and the markets, hopefully we perceive them to be positive, and we will be rewarded with positive ratings, investor interest in our shares, bonds, and all the other instruments that can bring FPIs into the country. But generally around investors being very cautious. For example, we've spoken about inflation targeting. This is new. This current leadership of the central bank, the investors need to see the central bank and the respect that they are genuinely targeting inflation as they have communicated. You have different levels of the level of volatility in our exchange rates remains very high. I was speaking to an investor who concluded a transaction very late in 2023, and he was complaining to me that they just finished the transaction in 2023 and they've lost 30% of value already, just within months, because the naira was devalued further from the level it was at the time they made the investment. So those types of activities will still make it very difficult for some investors to take a very that decision to come into the market. But like the central bank governor said, there are lots of interest on the portfolio side of things. The foreign portfolio investors are really interested, and to support that claim, the Nigerian capital market has also been performing very well. So a lot of them may just want to get very quickly on the bandwagon, so at least they can cash in on the positive outlook that is being projected by the
Kunle, let me just drop this in. From your report, what sectors are expected to drive FDI into the country this year?
FDIs are still is a bit, FDI is very tough, but I think
very uneven. We've seen FDI,
yes. Yeah, so we believe manufacturing hopefully should do well. Oil and gas activities hasn't gotten to the level that it was in the past, but hopefully there are some transactions in the pipeline. If they are completed, then there can be an acceleration in that space. But financial services, there are activities there as well. All of that. Agriculture is another area where that requires a lot of attention. There are investor interest in different segments of agriculture because, as I think you mentioned earlier, around the prioritizing local alternatives. So because of the level of devaluation that we've experienced, there are so many investors looking to start activities that can result in us being able to produce those local alternatives for different products that we use as Nigerians. So those are low-hanging fruits that we are already seeing interest in each of these areas, and we believe that if the reforms are right, the investors are calm, and the outlook for exchange rate becomes a bit more stable, we should see traction in all these areas very, very quickly, because the Nigerian securities are actually very, very cheap now when you compare them to what obtains internationally.
Okay, let's use the last 3 minutes to go through some other key trends, and let's talk about unlocking productivity. How should we unlock our productivity this year? And one other thing I would like us to take a look at is one area that will shape the economy this year, which you talked about. Consumers may likely adjust better to evolving policy and macro realities. I'm trying to adjust, so so I'd like you to talk about that. And I think lastly should be external factors. So with that, I think we may have covered the 7 trends.
Yeah, so to unlock productivity, I think for us as a nation, there are different things that are impacting us. The first, we have issues with insecurity, for example. That has to be dealt with, because it is quite difficult. Agriculture is a major aspect of our economy. It employs quite a lot of people, and issues relating to insecurity have prevented farmers from going to farm, and the outputs that we have. Even our food security is being threatened as a result of this. Infrastructure is also another major point that we need to address. We have that there are so many 4 aspects of that requires huge investments in. We have transportation, power, different trade carrying infrastructure that needs to be in place for us to be able to succeed as a nation. We either lack, or maybe they are not in good shape. So each and every one of those needs to be prioritized. And the other point you made around Nigerians adjusting, I think adjustment is required, because the disposable income of almost every one of us has been significantly impacted. And with lower disposable income, I think there's some level of prioritization that we believe will now start taking place, given what we experienced in 2023. So that prioritization will help to some extent reduce or maybe improve how prepared we are as citizens for what can happen in 2024. But generally, the outlook for our purchasing power is linked to the central bank's ability to control inflation and also bring the volatility of FX under control.
Okay. External shocks, a few seconds.
The external shocks, I think the biggest one is around the oil prices.
Okay.
Because we are still very dependent on the oil as a major foreign exchange earners, and as a country, we really need to ensure that at least, hopefully, there is no major shock that takes us to similar to what we experienced in 2020 when oil was sold for, was it $20 or $10?
Yeah.
Yes. So that's a major shock that we need to deal with. Also, oil theft is an issue that we need to also ensure that at least we are able to address. If we address this and we meet these major components of our revenue projection in the budget, hopefully we will have very little challenges dealing with the deficits and the revenue guidance that we have from the government in the budget.
Mr. Amida, 10 seconds. Let me ask this question. This is your report. Give us one word that summarizes this report. I asked Dr. Tayo Aduloju, the NESG CEO, the same question when I interviewed him last week on their report. Give me one word that encapsulates this report. One, not sentence, one word.
Insightful.
Okay, insightful. He told me intentionality. Why are you guys insightful? Intentionality. Thank you very much, Mr. Amida, for joining me today.
Obviously, in a political economy of oil and gas,
Thanks
which is
a lot for
very
having me.
central
Thank you.
to.
All right, I've been speaking with Kunle Amida, who is the partner
operations
deals
of the state.
advisory at PricewaterhouseCoopers
And indeed,
Nigeria. That's
the larger-
PwC. That's the show
Because of
today.
population growth,
Let's tighten
there
our
are
belts.
more
So let's
poor
just tighten
people
it
in
further,
Nigeria.
and let's hope that things will get better. But, you know, our resilience, we need to really pat ourselves on the back as Nigerians. I'll see you all again next time. Be the best you can be and be the change that you want to see. I am Nancy Naji. Bye for now.